Okay, welcome to another weekly recap of my 3x growth strategy to include MarketClub options. So the first thing I'm going to throw in, I'm going to just load up a snippet of the 3x growth strategy that I'm modeling for our Success Academy members. And just kind of show you how I modeled it, and it gives you an idea of what this 3x growth strategy does. It'll show you how it plays out, because this is a strategy I started to model for the Academy back in January. So I'm going to load that up, and then I will be back with our weekly recap. All right, so enjoy. Okay, welcome back. So today, one of my call options. So if you guys remember, let me bring over my spreadsheet here. You remember when I first started the 3x growth here, I bought 3 different call options to show you the difference based on times, right? So we had this 420 call option here that expired in January of 2022, which was a year from the date I bought it, right? And then we had this January 23 call option, which was 2 years from the date I bought it. And then we had this this December 23 call option, which was just about 3 years from the date I bought it. So so you can see the first two. So the first one to sell off was the 1 year call option that hit 100% return. And then we reinvested, which is down here. And what we did was we reinvested back into our original risk plus what we made off of the trade. So we basically just doubled this amount and added it back in there. So I didn't do it on these other 2 trades because I was really just showing you how these 2 trades worked out. So I'm not going to go ahead and redo those because I have the other 3x growth that I started just recently again. So on my live account. So I'll just model that from this point forward. But you can see now, okay, so let's take a look. Let's go over to our monitor tab here, and let's take a look at the last call option, this is the one from the original first 1 year dated call option. So when I reinvested using similar, I went a little farther out though. Now the template is designed to go to the farthest dated December call option. Okay. The only reason I did it this way is to show you that, what if your account size, or you can't find the price using the template? Well, then you would have to find one that you could, be able to meet your risk parameters, because we don't want to really bust those risk parameters. However, if we look at it, so now we're at 33.67, which is about a 65% return. So if we look at it, remember our original risk was 1302. That's what I originally risked on this trade, because I only bought 1 contract. I should have bought 2, but I only bought 1 because of the way I kind of did it out. But if you were using the template rules, just use the template rules based on your account size. But let's just look at the whole point of the 3x growth strategy is to 3x our initial risk. So if we multiply that times 3, that's $3,900. Well, our initial trade made $1,299 if you do the math between it. That's what it made, $1,299. And now this next trade right now, if we look at it, we paid $20.42. It's at $33.60. So it's almost at that $41 mark. So let's just do the math here. So $33.67 minus $20.42 equals $13.25, and don't forget we did 2 contracts, so times 2, so now we're at $26.50. That's our profit right now, $26.50. If we were to close out this trade, that's what we get, and we would have to see, did we 3x our strategy? And I already know we did, because if we take the $12.99 we originally made, we do is $26.50 plus $12.99 is $39.49, or almost $4,000, and we haven't hit the 100% mark here yet. So $4,000 is where we're at about, right? Just under. Excuse me. And our original risk of 1302, we wanted to 3x that, would be 3,900. So right now we've 3x'd it. Okay, so there's a small snippet of what we do for the Success Academy members. So now on to your regularly scheduled program. Okay, welcome. So let's jump right into this. Let's start with our 3x growth, and then I'll do my Market Club options. So there's nothing really to do here. Everything's just fine. Let's look at our chart. We can look at what SPY did today. I think it was a little, it was a little up, so not bad. Bottom line is, what I want to show you about the 3x growth, and the main reason I started doing the power stock strategy is because the 3x growth strategy is really a passive strategy. There is not much to do here. You don't really need to go in and check it each week. You literally can come to Market Club options if you have it, or let me go over to my Market Club options. You can literally just come in and see what the market's doing. You can see here on my smart scan, the market's always displayed at the top. So it's a plus 100. We're green across the board with the exception of the Dow. It's a plus 85 with a red daily, which is no concern to me. There's just not much to do here. So that's the beauty of the 3x growth strategy. And I think if you guys paper trade alongside doing the 3x growth, and then it's going to be difficult for you to do the power stock strategy because you don't have all the rules. And I can't give you all the rules because people pay for this. And Travis teaches this course, and it's something that I couldn't teach you on YouTube anyway. The whole point of it was I want to get you motivated. If you're interested in your financial future or investing or whatever, that's what these are for. So, okay, so as you can see, not much to do here when it comes to 3x growth strategy. So let's look at our Market Club options, and so today's Friday. I recorded something on Tuesday. You guys have already seen through that because I kind of lumped this all together. And you can see, so now Waste Management is coming back and OKE is going down. And I assume OKE is just having struggles because earnings are coming up next week. And, I did a little back testing here. If we go to like a 2-year chart and we look at earnings, this is a cliff. So I don't know what that's all about. But when we look at earnings, it does, there's nothing really there's no tea leaves to read here. Maybe it's going to do what it did over here. I don't know. It doesn't seem to have too much of an issue with earnings. The other thing about this stock, aside from this is the 2-year chart. Aside from that, when I look at like the 5-year chart was doing well, and then I don't know what happened here. Fell off this cliff, and then it started coming back again. So it wasn't the best of stocks, but I didn't mind it. The 2-year chart, for the most part, outside of this cliff it fell off of, the 2-year chart kind of ran it back up, and you can see it got to a low of $5, and today it's a 63. So I don't know. It is what it is. And again, that's just, I'm getting back into it. I haven't done Market Club options in a couple of years now. So just kind of getting back into it. And then we look at Waste Management. It's just basically recovering from our earnings. It took a dive down on earnings. One of the other, let me go to a 1-year chart here. It's a little easier to see. You can see it's coming back up. Today was a close, looks like just at the 7-day moving average. The other thing I look at, and this is another template we used to use, it's the Williams percent R, and it went into oversold here, and that's something we look at. When it goes to oversold, we look for a signal, after that, which is 2 closes above the 7. So if tomorrow, well, tomorrow's Saturday, so tomorrow it won't do anything. So if a Monday is a close above the 7-day, you could theoretically get into this trade all over again. So I'm kind of thinking that's what it might do. We'll see, because it had some pretty good volume yesterday and today to drive the prices back up. So that's pretty much where we're at with our market club options. Now, I did do a sift through some market club options. I did it about 10 minutes before we got in here. And this is what there were more, there were a lot more, but this is what I came up with. And all the reds, you can see, I just bid ask was too wide, too expensive, too few options. And let me show you what I'm talking about there. So let's go to ASPN. That was the first one. Go to my trade tab, ASPN. Oops. So when we look at an option, and it doesn't matter where you're looking here, but there's a couple things I look at. Open interest, that's liquidity for me. I mean, some of these options have some fantastic open interest, but you see this bid and ask spread? That's way too wide for me. And what do I mean? What's a good gauge to look at? So take a company like Apple. We know Apple's a strong company. Look at the bid ask spread. Look at how many options on the option chain. That's fantastic. You can't really compare stocks to ETFs, because if we go to SPY, you're going to see a penny on the bid ask spread, right? So 604, I was wrong, a nickel. So, but ETFs are, wholly different when we start to, especially when we look at, let's just we'll compare apple to apple, apples to apples. We'll look at the January options here, and you can see the bid ask spread is 6,000. Look at the open interest. Yeah, there's no liquidity problems. I'm always looking for an open interest over 100. So ASPN was one of them. Let's look at MCO. MCO was my other one. Well, that was yet another one. And look at this one, was just, I can't afford them. Look at these options. For me to afford them, I have to go to the 450, which means I'm asking this stock to move a significant amount in 84 days. And we could figure out what that is. So 450, so that's about $46 divided by 404. So we're asking it to move 11% in 84 days. That's an awful lot to ask. You can go to the chart and kind of look, did it move 11% in those amount of times? Maybe here, but long term, no. I mean, it does a nice run up here on the 1 year. Even the 2 year didn't look horrible. It's kind of flat here between 19 and 20. And the interesting thing is it didn't, I'm sorry, 19 and 20 is over here. It followed the general market. It came back up, and then it just kind of was flat all the way until about, just past the March timeframe into this year. So, and now it's doing a charge up, which is great, but it doesn't matter. I can't afford those options. The bid and ask are also pretty big, $1.20. But $1,400 for an option. Thanks, but no thanks. Let's see, what was another one? Let's look at AMRC. This is another one where you got to be careful when you only see a few options available, right? So if you close this all down, that's it. So just to give you a comparison, let's look at Apple, and let's close all these down. Look at how many options they have available. So AMRC just had not much to pick from. I could either take an 84 or 167, and it was a weekly. Open interest is nil here. It's not great here. And then big, the bid and ask is way too far apart. So that's kind of what I was looking at. Sony looked good. That was another one. Everything looked good. We got a lot of good options here. Open interest is okay. At the money open interest is much better than if I want to go a little out of the money, which is okay. I don't mind buying at the money. I'm okay with that. The bid-ask spread is pretty good. The farther you go out in options, you can see the open interest starts to get better. And that's typical because, buying an option with 35 days is not a thing I do. But then even when you get to April, you can see there's not much there. But the bottom line is it just didn't do well in IBD. So I like to check the fundamentals. And when you go to the fundamentals, it just, I don't know if I still have it open. Let me see. Oh, I don't. When you go to the fundamentals, it just isn't doing well. So I think it was a score of 74. So that's not good for me. So Sony wasn't it. So the winner for this week was EW. So when you can see, not bad with options. If I go 84 days out, I got some decent open interest. My bid-ask spread is a little wide, but really what's keeping me away from this is just the actual price of the option. And so I'd really want to target this February one, not the January. And this price is, 125. So it's at 119.84. So I'm asking the stock to move about 5%, which isn't, asking too much of it in 112 days. But remember, I'm only going to be in it for 30 days less than that. So 90 days. So, but the big thing here, I'd want to buy the 125. That was what I targeted when I was looking at it. So if we take the 119 times 1.05, that's 124. If I take 119 times 1.1, that's 130, which isn't bad. But you see these prices, 510 or 584.10. This doesn't match up with the current risk I have going. So if these trades turned out to be winning trades, this trade could theoretically blow away most of this profit here. So, and you can see it would smoke the profit I'm currently at. So if these options just didn't get up to where I need them to get up to, even if they get up to 100%, that one option can kill all my profit. So I don't want to do that. So I want to keep my risk parameters close. So the bottom line is, and this is the nature of the beast when you're trading MarketClub options, or when you're trading options in general, is you just have to be patient. All right, so that will do it for this week's recap. Remember, if you have not subscribed, please hit that subscribe button, hit the notification bell, smash the like button, give me a comment. Even if you write comment, it helps with the YouTube algorithm. This will get out to more people. I'm really just trying to get people going with options because they made a huge impact and difference in my life, especially our financial life. So that's it, you guys. Please, if you got any real comments or you didn't like the video, if you're going to give it a thumbs down, please tell me what you didn't like and I will fix it. Okay. So that's it. I will see you in next week's weekly recap. Take care.